This podcast is brought to you by TaxCalc because we know that bringing you the very best in tax, accounts, and practice management software is only the start of the journey.
Welcome to the TaxCalc podcast of the TaxCalc webinar, HMRC Investigations Investigated, presented by Andy North and Dean Shepherd with special guests Sara Scala and Paul Rigney. The original webinar was broadcast on the 15th of March 2023 and can be viewed at www.taxcalc.com/events. Please be aware that deadlines, rates and other technical details referenced may have changed since this date.
Good afternoon and welcome back to TaxCalc TV. I'm Andy North, the CMO here at TaxCalc, and today we'll be giving you the inside track on HMRC inquiries. We're going to be looking at what HMRC is saying about what actions and activities that are causing concern, how much that is translating into reality, and how in a post-COVID world they're approaching the mechanics of the inquiry. And to guide us through this, we're joined by a fantastic panel. First of all, I'm joined by Sara Scala. Sara is the head of dispute resolution at Claritas Tax. Taxpayers and their accountants engage Claritas for Sara's specialist expertise, which includes HMRC investigations and including COP 8 and COP 9 procedures. Also, we have Paul Rigney, who is head of the ICPA, and he is also head of sales at Vantage Fee Protection, which means he has a good overview of the challenges facing accountants in practice and the HMRC investigations. Thank you so much for joining us today. So before we start, as always, there's a lot of housekeeping. The most common question we get is always, will you be sending out a copy of this? And the answer is yes. Shortly after we wrap up, you'll receive a full recording, so you don't have to take notes if you don't want to. Secondly, there are a couple of options at the bottom right of the screen. If you want to ask a question to the panel, and we do love receiving your questions, and we expect there to be quite a few today, please use the Q&A box. Only we will see those there. If you do want to communicate with the other people viewing, you are welcome to use the chat function, but we may not necessarily see those comments, so that's to chat amongst yourselves. So, before we start, Sara, I think it would be useful to define some terms around this. There are a number of communications that your client might receive. It'd be useful to just talk through what they are and what they mean. Yes,
very happy to do so, Andy. So, members of the audience will be familiar with the traditional routes through which HMRC may ask questions into a taxpayer's affairs. Those being what we refer to as compliance checks, also known as a VAT visit, a pay-as-you-earn visit, where HMRC will write out, ask some initial questions of a visit and want to arrange an appointment to visit the premises. There are also HMRC inquiries, which typically ask questions into a particular tax return for a particular year. And then there are full-blown investigations. So we still see all of those, although a relatively new approach, and I must say a very efficient one for HMRC in terms of resource, is through the nudge letter campaigns. Right. Which I think Paul is going to elaborate on because it is affected by the fee protection insurance.
That's right. So what we've found recently is that as the revenue continues to grow, the data that is held in Connect, which has probably been one of the best investments by a country mile. There's over now 32 billion lines of data held in Connect on taxpayers across the UK. They're using that information to generate reports into certain areas and driving campaigns through nudge letters. So for the cost of a stamp, they can ask any taxpayer to consider the validity of a return that's been submitted, the accuracy of that return, and suggest they review it. Your client may well review the position. You might repair and amend that return. The effect of that is the revenue will gain the additional tax. They'll get it very quickly. They'll get it without the involvement of any revenue officer. No need to open a formal inquiry. And if there is no response to that letter, or the response is, no, we think we're fine, and the revenue ultimately have data that proves otherwise, then obviously your client then will face greater penalties, interest and tax once the revenue have concluded the formal inquiry. So nudge letters, very effective, very simple for the revenue to use, and we're going to see more and more of these campaigns being driven as they continue to try and close the perceived tax gap.
So do you want to tell us a little bit more about Connect? Because what kind of information is going into it? What's the impact of it been?
So Connect basically is just a huge silo, and any information the government may hold on any taxpayer or business is basically funneled directly into this massive silo. That information may come from information submitted to HMRC itself. It may be third-party information from banks and building societies with requirements to provide revenue information of interest, payments, etc. coming through. It could be a result of an information request. We know for a fact that the likes of MasterCard, Visa have all had information requests asking for information around cardholders. We know that estate agents a few years ago were asked for information about any landlords on whose behalf they manage properties. All that information and data is poured straight into Connect. We add to that Companies House, Land Registry, Department of Social Security, Department of Employment. All these areas feed information and data into Connect, and it is readily available then to generate reports, and it links immediately through to the taxpayer's file. So that is there, it's ready, and is a key part now of what will ultimately happen with MTD and checking submission of quarter returns against information the revenue already hold.
Right, so they're able now to identify groups far more easily, and like all good systems, I presume it's using AI to...
Yeah, it's using AI, it's intelligent, it's learning. British Aerospace built this system for the revenue, and all the information the revenue traditionally have already held in paper form. So the banks have always provided details of interest paid on taxpayers' accounts. But it was in paper form, it was difficult to put to a taxpayer's file. That process wasn't slick and easy. Now, in theory, as soon as that information is received, within seconds, it's linked with that taxpayer's file.
So would you say that the rise, if you like, of nudge letters is that kind of superseding? I mean, presumably we're still seeing, the investigations, and we're seeing the formal inquiries. Are they being fewer? Are there fewer of those now with nudge letters?
I think there's certainly been a decrease in the opening of new inquiries by HMRC, partly because of resource during the pandemic being allocated elsewhere. So the officers who might typically assess the risks of there being an undue declaration of tax might have been seconded onto things like the furlough or universal credit teams. So we haven't yet seen those inquiries return to pre-pandemic levels, right. Even though we're so far from the end of the pandemic. So suggestions are that perhaps it is a permanent change of tactic from HMRC, and nudge letters are the way forward, which would make sense because HMRC have far less work to do, and instead the taxpayer has to engage people like myself to do the work and at their own expense.
Right.
So commercially you can see why HMRC might be using nudge letters more frequently.
Right, so that's definitely a trend that we're seeing.
We have had a question come in just asking what percentage of taxpayers or businesses face some kind of investigation or compliance check every year. I guess it's hard to say, but do we have any idea?
I think, well, it depends. For instance, if it was a business that's VAT registered, your chance of inquiry is obviously higher because there's already 4 additional returns there that can be inquired into. If it's a business with payroll, that risk of a payroll compliance visit's there at any time. The revenue still tend to target certain traditional trades, businesses where they think that historically there has always been a good success rate in making challenges on accounts, whether that's cash businesses, whether that is things like scrap metal, construction. Those are still key areas for the revenue where they believe there is tax to be recovered. the business in Vantage Fee Protection, if we have a look, if we went back to November 21, we received 63 claims in that 1 month. If we fast forward to November 22, that now has gone up to just over 168 claims in the month. So I think what we're finding is the revenue have now closed down a lot of the inquiries that were ongoing pre-pandemic. They've worked at closing those, bringing them to conclusion. And I think moving forward now, we will start to see them try and get back to pre-pandemic levels. They still haven't got the resource necessary to do it, but the attempt will be there to do it. And nudge letters will drive that. But the targeted bits will still be there. The bits where they're seeing accounts where the gross profit margins are widely away from where they imagine they should be, those are still going to be picked up for inquiry and investigation. What the revenue are doing now is they're using data a lot more to target the work they're doing, because it's proved to them that they're getting far better returns doing that, rather than just a scattergun approach, opening an inquiry into a set of accounts that lands on the desk. They won't do that now unless they think they've got just cause to do it, backed by data perhaps that they're holding.
So do we think random inquiries now, there's no such thing as a random inquiry anymore, everything is targeted or data driven?
Yeah, in the main, the revenue still have targets to reach around the number of inquiries they open a year and where those inquiries come from. So they still will be targeted against that. But actually, they're saying that how they approach that target is changing. So the number of inquiries and the yield they're expected to achieve is there, it's public knowledge. How they achieve it and how they go about getting that is what's changing now. They're being more clever and intelligent about it. So everyone they get to now, they really realistically think there is something to be had.
Right.
Interesting question there. Should we move on to the poll before we answer some of these questions? Because there's some really good ones coming through.
Yeah, sure.
We want to launch. We wanted to find out about your experience with nudge letters.
Yeah, so we've got the first poll running for you now. Hopefully you see that up on your screen. If it hasn't popped up, then just click down to the little polls tab next to the question and chat tab. So the first poll we're running is how many of your clients have received nudge letters in the past 12 months? None. What's a nudge letter? Hopefully you know what a nudge letter is now. We've covered that one off, but if you've received none, then please tick that. Very few, some, or significant numbers of those nudge letters in the past 12 months. We'll let that poll run and see what results we get from there.
Excellent. There's a few questions that have come in that I think it might be worthwhile looking at. Is there a list of the gross profit margins that's available that HMRC would expect?
The revenue used to have what they call the business economic models for certain trades and professions. Those were available online on the government website. I'm not sure whether they still are available. But if you look at the business economic models, it would tell you what they expect gross profit margins to be in those areas. It used to be closely guarded secrets, and it used to be stuff that was sit in the inquiries manual within the revenue. But they've started to be a bit more open about that a few years ago. And it's a while since I've looked. I can't honestly swear whether they're there or not, but they certainly used to be.
If anyone's got one, please do share in the Q&A box. What's the financial level that HMRC would judge that they've had a win? Is this a question you get asked a lot? It's the professor says it used to be a take of £1,000, he believes.
Again, times have changed, haven't they? In the good old days, there was no measure put against time costs from the revenue to return on income. Each district would have its own targets. The inspectors within the district would have the caseload to work. I suppose that business model's moved away now from that, and actually there is a cost centre piece worked here that if they are going to open an inquiry into something, then they are expected to see a return. They do need to recover some tax from that inquiry. I suppose it's size and scale, isn't it? If the guy's turnover's £10,000 and they're recovering an extra £1,000 of tax, that's quite a result. If it's £2 million of the turnover and they only get another £20,000-30,000, is that a result? I don't know. It depends how much time the inspector's ultimately spent, I suppose, in getting to that point where he's raised the additional assessment or amended the return. the target is the tax gap, and the revenue are under pressure to close that perceived tax gap, and how they achieve it is down to them as a department.
Okay. How are we doing with the poll, Dee?
Yeah, I've closed that poll now, so all results are in. So, 56% of respondents have seen nudge letters in the past 12 months, most of those falling between very few and some. 44% have not seen one in the last 12 months, but I think 56% is quite a high proportion.
Yeah.
Is that what you'd expect?
Yeah, given how many HMRC are issuing in this scattergun approach, I think many taxpayers are thinking, when's mine going to land? Not if, but when. There are so many routes through which HMRC want to target taxpayers over the numerous campaigns that surely we all fall into at least one of those campaigns.
Right. And 56%. There's so many questions coming in. We move on. The next section, we want to be looking at what HMRC are focusing on. So we'll just come to that. But there was one question I'd like to ask, which was relating to are the HMRC required to give a copy of their risk analysis document that's resulted? Do they have to say why a compliance check is being carried out?
I would have thought that they can't, because it would jeopardise the investigation particularly if the nature of the initial communication is, we think you've got something to tell us. Is that the case?
They're not going to tell you why.
Yes,
at that point.
Even if it was an inquiry that begins with a list of questions and therefore it's quite clear what HMRC's focus is, I haven't ever seen that information requested or provided, possibly something you could ask
even
for
afterwards.
Yeah. That's what I'm thinking, but it hasn't come up for me.
No, Taxes Management Act just gives the revenue the right to examine any set of return and accounts submitted, and they don't need to disclose the reason as to why that inquiry has been opened. It's just part of the function they're entitled to carry out.
In terms of the other kind of letters that you can receive, we did have one question of what's the difference between COP 8 and COP 9, if you perhaps explain that.
Happy to give my opinion. Code of Practice 9, for people that aren't familiar, is the set of rules through which that type of investigation is managed, and HMRC agree to adhere to those, as does the taxpayer. And Code of Practice 9 is considered appropriate where there's a suspicion of tax fraud. Typically, Code of Practice 8 is well known for exploring a more technical point. So, for example, if HMRC want to challenge whether somebody was UK resident and therefore liable to UK tax in a particular tax year, they might investigate using Code of Practice 8. Although latterly, through my various discussions with my contentious tax group, I learned from a former HMRC person who is now a member of my group that within HMRC, he said that in his time there, which was up until the past 2 years, HMRC would use Code of Practice 8 rather than Code of Practice 9 where they suspected fraud, because they didn't want the taxpayer to have the protection against criminal prosecution that Code of Practice 9 offers. So he suggested that sometimes the more serious the case, the more you want to not let on how serious you believe it to be. But I suppose only other ex-HMRC people can confirm that.
Interesting.
So there's a certain level of immunity.
Yes, if you sign up to the Code of Practice 9 process and you cooperate and nothing new comes to light that wasn't volunteered up at the outset, then there is protection. And of course, the likelihood HMRC will proceed to a criminal investigation is reserved for the most uncooperative taxpayers, because people wouldn't go forward if that was a standard approach. To accept a disclosure by somebody and then revert to criminal prosecution.
Excellent. Okay. So, Paul, just to warn you, there's lots of questions about Connect coming through. So we're trying to answer those at the end.
Okay.
But I think what a lot of people want to know is, what are HMRC saying that they're going to be looking for? What kind of activities, and how's that translating into real life? What are we actually seeing?
Yes. So my view is that what HMRC say they're focusing on does eventually filter through to what we're seeing on the ground in real life client cases. There are some things that the webinar attendees might have heard about that we're not yet seeing, so perhaps I'll mention those first. One that comes to mind is a focus on offshore companies that hold land and property in the UK. So HMRC announced at the late last year that they were going to be issuing nudge letters to the UK-based directors of these offshore companies, saying you do have a responsibility to pay taxes on rents generated through the properties in the UK, or pay capital gains tax on any gains made on sale. From what I'm hearing, that very few of those letters have come through yet. I suspect it might be because the campaign was aligned with a requirement for the offshore companies to be registered with Companies House,
right,
which hadn't yet been necessary. And the deadline to do that passed on the 31st of January 2023. So it could be that similar to the Connect system, HMRC, Companies House is certainly one of those sources on Connect. So HMRC are perhaps linking those registrations through to the Connect system, and then they can better target those letters. Or perhaps there are other areas of Connect through which they can establish the companies that ought to have registered with Companies House and didn't, and then approach those also.
So it's been a kind of 6-month lag so far, but you would probably expect that area, overseas property, to be increased.
Yes, and the very publication of it as a focus ought to mean that some people that know they fall into that category might be going forward voluntarily anyway, because doing so before you're nudged, it does lead to a lower penalty when it comes to settling your taxes.
I see.
We've had an interesting question come in, I guess, on the approach to interest from HMRC. And so if your clients receive one of these letters, but they feel, or you feel, and in agreement with them, that they're right in claiming everything that's been claimed, what is the best mode of action going forward? Should you call HMRC, write to them, something else?
So we're talking about HMRC issuing a letter, not a formal inquiry, but nudging the taxpayer to check their affairs, and the taxpayer and their accountant conclude there's nothing that needs to be amended. There's differing views on how to handle the nudge letters, and my view is it depends on what type of campaign it is. The reason some people think they're better not responded to is because if you respond and say there's nothing to declare, and later it comes to light that there was, HMRC could suggest that you made a false statement, even though you may have genuinely believed everything was in order. I've recently advised on the nudge letters specific to research and development claims, and my advice on that one was to carefully consider everything the letter encouraged you to consider, create a file note and politely tell HMRC that you have considered those questions and there is nothing that you'd like to change. The reason I thought there was a low risk of sending in some response on that is because R&D is a very technical area. And there's a lot of guidance, and there are technical R&D specialists that would have made the claim in the first place. If the nudge letter is very open and it's almost impossible to check and prove negatives, my advice might be different, but it would depend. Obviously, if the nudge letter says, have you got anything whatsoever that you might want to tell us about, with no direction, you might be wise not to say, I can confirm 100% that my tax affairs are in order. You can say everything you've declared and you've presented to them, doesn't need to be amended, but you're very exposed if the letter is too generic. So it depends. We'd be very happy to follow up separately.
Good.
I mean, obviously, there's any number of people who will help you with your R&D claim, but they're not necessarily so useful in the event of an investigation or an inquiry.
That's right. I'd certainly suggest that as part of your engagement team, even if it's on an informal basis, having somebody like myself at the end of the phone to run strategy by is strongly advised, because the R&D specialists are excellent at what they do, but they probably don't handle HMRC as often as tax disputes people.
Definitely. Okay, so very wise words. So what else? We've got overseas
Yes.
in particular. What else have we seen?
HMRC have recently publicised a focus on social media influence and online sellers. I've heard reports that they're perhaps not qualifying the cases that they're picking up as best as they could be. I've heard of some very small cases being picked up on that, which is a shame, because I'm sure that there are bigger ones to focus on. The usual campaigns are still ongoing. For example, UK landlords. I've seen nudge letters on those in recent weeks. I signed up a new case in the past week, which is a gentleman that is a landlord and lets out his offshore property. So HMRC say they're focusing on those things, and that's my experience. Something that they have publicised on their website for several years now, which is of particular interest to me, is something called the electronic sales suppression software. As the name suggests, HMRC have discovered that a business can purchase software, for example, a card machine, which has been tampered with, if you like, or set up to produce reports that purposefully suppress the level of sales, of card sales that have been taken. So this is an example where HMRC said that they would be focusing on this. We started to wonder if that was really true, but actually the next thing we heard was that a business had been raided, the alleged manufacturer of this equipment, and it was discovered that they'd sold this equipment to 10,000 UK businesses. So that suggests that HMRC hold the details now of the majority, if not all, of those businesses, and HMRC opened a specific disclosure opportunity for those businesses to go forward. I understand very few registrations were made by the January deadline, so I would expect to see more formal inquiry letters going out in relation to that particular focus area.
Wow. Okay, that's going to be a hot one.
That's a huge number, 10,000. I would think they'll be dining out on that one for a long time.
Yes.
What about you, Paul? Is there anything that you would add to this in terms of?
I think that sort of mirrors what we're seeing is in terms of the fee protection and the claims we're seeing at the moment. Last quarter of 2022, we saw a 200% increase in the number of R&D claims we were seeing, which reflects the well-publicised activity the revenue are carrying out in that area at the moment. VAT still represents about 42% of claims that we see on an annual basis. One of the things we are seeing a lot of at the moment is we're seeing a lot of aspect inquiries into relief claims. So whether that's CGT relief, loss relief, doesn't seem to really matter which, but the revenue seem to be quite happy at the moment to challenge relief claims. No new taxes perhaps, but nothing to say they can't reinvent or reinterpret how they regard the relief is being claimed and how it should be claimed. So we're seeing a bit of an increase around that at the moment, and that I suspect is a deliberate decision to challenge relief claims to ensure that they are correct and in line with their take on the legislation and the relief laws. Yeah.
I had another interesting question come in. Just asking if there's any advice or tips that you can give to help clients stay under the radar, or is there, I guess, certain things you could be doing in terms of dealing with the client's affairs that reduces risk of being subject to inquiry?
Well, I am sometimes asked this. It's a bit of it's almost like it's not my area. It's not the point where I would be involved. I recently got asked to take on a client because he was about to enter into a property sale, and I had to decline the opportunity and say, I'm sure you're very well respected and well known firm of accountants can manage that for you, because that is what, for example, a private client tax advisor will do as standard practice. They'll make sure that when they produce a tax return reporting that disposal in this case, that they have provided enough information. The calculation itself is technically sound. It's really important to give HMRC all the information that they would need and be transparent about what you've done, so that they can, should they wish, ask questions. Not sure if you have anything to add, Paul.
Yeah, I think what we've got to realise is the revenue are moving away from what has always traditionally been the way of carrying out inquiries, and that was always after the event. So most, apart from compliance visits, most of the revenue activity was always really driven as being after the event. So it could be 12 months after the end of the accounting period when the return's submitted. This then a 12-month inquiry window. It could be 18 months, 2 years down the line before the revenue actually opened that inquiry into that business. As we move into MTD now and making tax digital, the pressure now and the way the revenue are moving is more in-year inquiries, compliance visits, nudge letters in a way, but the focus now moving forward is going to be actually in-year inquiries. The revenue are going to have that return on a quarterly basis. They can check it against information that's held on Connect and other data that's on your client's file. So it's going to be a lot more focused attack work, very much shortly after the event's arisen as they see it. So I think if you're talking about how you should help keep your client below the radar, then obviously those returns should be submitted in a timely fashion. The information on them should be full and correct as far as you can advise them and ensure that's the case. Will they be picked up for inquiry? Who knows? It may well be they just work in an area or an industry or profession that actually is attracting the revenue's attention at that time. There's no formula that any professional on this side of the fence can give that would safeguard your clients from the risk of inquiry.
On that note, we had a question come in slightly earlier about, do nudge letters depend on the quality or the detail of the account submitted, or are they much more driven by kind of demographics and that AI?
No, I mean, a lot of the nudge campaigns we've seen that have come out basically suggest that, for instance, there's been omitted income. So we look at the landlord campaign, the belief would be there that the taxpayer had admitted to declare rental property income coming through. So is that about the quality of the accounts and return? No. The risk there is usually that actually the client's not made the disclosure and submitted the information he should in the way he should have done it. And I think that's what nudge letters are targeting against. There'll always be areas eventually where there'll be dispute about actually there was no need to declare that, there was no need to return that. And there'll be some areas around that. We've seen it nudge letters, and we've seen subsequent inquiries off a nudge letter where actually the information the revenue have paired with that taxpayer's file has been incorrect, because actually the NI number was wrong.
Right.
And that's just a simple clerical error at some point in time that's just linked it to the wrong file.
But to be clear though, those nudge letters are campaign driven, so they're saying we've noticed that a certain area of landlord income is prone to this problem, rather than these people have not provided all of the information or
I mean,
lack of detail.
If you look at the landlords campaign, they spend a long time going around estate agents and letting agents saying we want information of every landlord you actually rent properties on behalf of, whose properties you manage. We need them, want that information. Well, that would, once you've received that, that's a very simple AI report check through Connect and returns, have these been declared? And if not, well, fine, nudge letter campaign, they're on the list. We'll give them the chance to make a voluntary disclosure and correct the return. If they do, great, fine, no great effort. If not, and we have to put effort into it, then there'll be greater penalties at the end of it and we'll recover greater costs.
So in that case, it's both of the scenarios. The targeted campaign was the visit to the estate agents, but by the time they wrote out, they did actually have evidence that properties were held and not on the tax return because they'd already checked.
Yeah.
Right. Any particular questions, or shall we go to the next section?
No, let's head on to the next section.
The next section is we are going to be wanted to look at. Okay, so we've got some idea of where HMRC are focusing. What happens if you receive either an inquiry notification or a nudge letter? What should your response be? And also, in answer to one of the questions that's come in, what do they look like? What does a nudge letter look like? We had that question. So.
Well, the nudge letters can look slightly different depending on the campaign. They usually give you an indicator of the type of thing you might have emitted, so offshore property, UK rental income, nudging you to check your R&D claim, and sometimes, or the social media influencers and online sellers, it's specified there, and they sometimes include a certificate, sometimes not, but that's fairly self-explanatory. The advice is the same, whichever type you receive, is take advice first of all. You can check and see if it asks for a response and it has a deadline, but typically they don't, which is one of the reasons you should seek advice, because the advice might be not to respond. I had the gentleman who I'm assisting who came to me last week. He had actually rang HMRC on receipt of the letter and said to them, I know I've got properties overseas, but I haven't declared them in the UK because I'm paying tax overseas. And the advisor said, oh, shall I put you down as not having anything to amend then? And he said, yes. Well, that was poor performance on the part of HMRC, because then he was in a panic when he realised he did actually need to make a disclosure. So I've since changed the option that he's selected, and he will be making what we call a worldwide disclosure. So that we bring in all of his offshore aspects as well as his UK position, which is fairly straightforward. He's on pay-as-you-earn. So nudge letters, that would be my advice. If you want to see sample letters, people could contact me. I tend to have people, if I haven't received one, people I know have, and within my network we freely share redacted versions. The CIOT is another source of information. I know they have some nudge letters on their website. Inquiry letters, I've got some basic tips. Apologies if you're already familiar with them, but simple checks would be, if you receive an inquiry letter, first check who's under inquiry. Sounds simple, but is it a director in an individual capacity, or is it his company, his or her company? Once you've established that, check what year the inquiry relates to and have HMRC opened their inquiry into that particular tax year's tax return in time. They typically have 12 months from when they receive the tax return. So does that date fall just outside, in which case you can say you've not got a valid inquiry here. Assuming it is valid, check the questions. Do they all relate to the taxpayer under inquiry? For example, are HMRC asking an individual for information that actually is company information? You might be able to back that question. If you wish, you might find it helpful to respond because it supports your case. So, presuming that you are, as the accountant, content with the questions, they all seem reasonably required to check the tax position, I would always advise, meet the client. I had a call in recent months with an accountant. I said, when are you meeting your client? This was a particularly serious issue. He said, meeting them on Tuesday. I said, right, when you've drafted your response letter up following your meeting, I'll happily review it for you. Oh, I've drafted it. I'll send you a copy now. And he pinged it to me on the call. And I thought, well, even no matter how well you know your client, you should still meet with them, have an open discussion about this inquiry letter. I would suggest having in the front of your mind what might have gone wrong and why. So you're already trying to pitch where the penalty might fall. And then as the inquiry progresses, don't let HMRC lead you with batting back their questions. If you want a meeting, request a meeting. If you decide that you want to present the information in a different format, or you have a different piece of information that evidences the same point HMRC wants satisfying on, feel free to think outside the box a bit.
I think it's always important as well, if you're having a meeting with the revenue, ask them for an agenda of the meeting first, and then you don't get caught out. We're here to discuss the agenda. If there's anything else you wish to discuss, we'll have a further meeting. So if there is something that's thrown in and you're not prepared for it, or it's a discussion you need to have with your client, if it's not on the agenda and it's their agenda, well, we're only here to discuss your agenda. And if there's anything else further, we're happy to come back and have a further meeting. And it's an old revenue trick. Yeah, we'll just invite you to a meeting. There'll be no agenda, and it's just open field day of what you're going to talk about.
Good advice.
In there, and so agenda, stick to it. And if there's anything left field at the meeting, just say it now.
What's your feeling on attending a meeting at the request of HMRC? Because I know some people will say, "Oh, don't ever have a meeting." Other people will say, "Well, it could drag on for years if you don't have a meeting." I know I handled an inquiry once, and I tried to back the request for a meeting and said, "Give me a list of points you want to know," and they sent me, I think, over 100 different questions. And eventually I said, "Okay, let's just have a meeting because we'll be here all year trying to deal with this."
My opinion is I like meetings. I'm probably very comfortable in HMRC meetings because of the number I've had. They can help progress cases more rapidly. They certainly help the client understand what progress is being made. Much easier to say that the case is moving forwards if each month you, depending on the case, you've met either HMRC or the client and provided updates. Care obviously needs to be taken as to whether you would necessarily take a client with you. I'd say more often than not, 90% of the time I would meet HMRC without my clients. There are occasions where it's part of standard procedure, like when dealing with a Code of Practice 9 case. If I did take a client to a meeting, I would typically meet the client first for a meeting before the meeting, and probably have had a meeting on a different day before to prep for the scheduled meeting. Now HMRC will more typically conduct meetings on Teams, so care needs to be taken. If a meeting is arranged, is it a meeting? Will HMRC have their cameras on? They still use the excuse that the broadband is too poor for them to be visible. So I would always check in advance, are you going to be visible? Because it might intimidate my client if you're not. And just know whether they are or not. If they suggest they will be and then ultimately they're not, I might ask to defer the meeting and say it's not acceptable. I had a scenario recently where I logged on, I was visible, they weren't, and they had the cheek to ask me to show my driving licence to confirm my identity. And I didn't see their face for the whole meeting. So yes, clients should always be supported, and I can see benefits to meeting with HMRC.
Yeah, and certainly in my time in practice, I always take the view that you'll have a gut feeling as to how you think your client will stand up to attending that meeting. There are clients I would happily take to a revenue meeting, and there's some clients I just would never in a million years think of putting in front of an inspector. And you'll know where your client sits in that range. And it's nothing necessarily because they've got something to hide or whatever. It's just the type of personality they are, that they'll just be so uptight, so nervous, or whatever, that they'll just say anything to get out of the room. And it's very difficult to control some people. Other people are so confident the other way, you have the same problem controlling them as well. And you got your instruction is to your client, you do not say anything unless I tell you to answer the question. The revenue might address the question to your client. Your client looks at you first before you acknowledge the fact, yes, you can answer that question.
Your better question is, are clients obliged to attend a meeting? Can HMRC enforce that, or can you always stick to your guns and say, look, no, we don't want this client here?
I find in Code of Practice 9 cases there is an expectation, but I've certainly had cases where I've managed to persuade HMRC the client wouldn't cope very well, and we've been able to proceed without the client in attendance.
In the old days, it always used to come down. If your client wasn't willing to go to a meeting, it was always seen as lack of cooperation.
But currently, has that changed?
The whole world's changed in pandemic, hasn't it? And there's a bit that actually there's more reason why people won't want to. Things are being done more remotely now anyway. Districts are more remote. It's not like the good old days where if you sort of lived in Manchester, you had 12 districts in one building. You could go miles and miles to get to see an inspector these days.
I mean, that could prove problematic. For example, I had a Code of Practice 8 case where my client didn't meet HMRC because he was always out of the country, which was helpful because it was a residency challenge. Now, and one of the reasons we didn't want him to meet HMRC is he absolutely hated them and it wouldn't have gone down well. He wouldn't have withstood an hour with them. But he might have had to meet them on Teams in the current situation, which would have required careful prep.
I think the piece is you need to be seen to cooperate. On a professional level, you need to seem to be able to cooperate, and in some part that is, letting your client meet a client who's well briefed, knows exactly what the rules are. You're confident your client will stick by those rules, he'll take and follow your lead. All reasons to go and have a meeting and hopefully bring it to a conclusion sooner rather than later. If you've got serious doubts about your client for whatever reason, then you need to put as many barriers up as you can by replying to everything swiftly, dealing very professionally with the inspector, but doing it quickly, rapidly, so there's no real excuse for him wanting to see the client. The other thing about seeing the client always used to be about signing the settlement. And there was a piece that the inspector liked to see the actual taxpayer sign the settlement and explain what the settlement meant and the risk of future action if that agreement and settlement wasn't right and true and correct. Again, the digital world changed a lot of that, wet signatures, everything else. It's changed the world around that.
But to be clear, there's no necessary compunction that they can force the client to chart. Okay. I'm very conscious of time, but there was a question here that kind of segues nicely onto the area that we're going to look at, because obviously some of this work is very expensive, or can be. Are nudge letters covered by fee protection? And luckily we've got you here to answer that question.
Okay. So I suppose the answer to that one is quite simple, really. Different providers have different views. So some providers will say that they won't cover nudge letters because they are not an inquiry. Most fee protection policies are written on the basis that they cover tax inquiries, and a tax inquiry is something that's subject to a 9A or a 12A notice. Some will specifically go on to say that they cover disputes and pre-disputes around VAT, pay-as-you-earn compliance. But nudge letters don't fall into any of those categories, because actually all they are is a letter that suggests that your client may want to reconsider a return he submitted. There is no formal inquiry in place at that time. So different providers different attitudes. I can only talk about Vantage because that's who I'm here to represent as such. And we do cover nudge letters. Reason being, we believe that a nudge letter correctly answered with 2 or 3 hours time may well save us having to find and cover costs of an aspect for a full inquiry that then might be 7-10 hours of time. So for us, it seems a false economy not to cover the nudge letter.
So it would be good to just give our viewers just a brief overview in case they're not certain about how fee protection works. Just to give us just a little bit of a 1 minute.
1 minute?
Yeah.
1 minute, okay. So tax-free protection is basically an insurance policy. It's an insurance policy that's designed to cover the additional accountancy charges arising in the event of an HMRC inquiry into a covered client. Various ways of providing that cover to your client, whether that's through an optional client decide scheme or an all client scheme cover. Why would you have one? There's a myth with fee protection that it's all about protecting your client. It isn't. It's all about protecting you, the accountant. It's your fees that are at risk. So if you have a client who gets an inquiry, you incur those additional costs. It's your recovery of those fees that are at risk. So you can protect yourself against that risk, you can protect your client against the risk of additional fees, and you can generate an extra income stream whilst getting technical support through tax and VAT advice lines, employment law, health and safety and general legal. So from my point of view, if I was in practice as I was, it's a no-brainer. You would have a fee protection policy in place, you'd recover your costs, you'd make some margin and gain some technical support in the process.
Thank you. So do you want to quickly go to the poll? Because we wanted to ask.
Let's run the poll, why not? Just a quick one really. Do you currently offer your clients fee protection in the event of inquiries? We've got 4 straightforward options there. No, I don't offer fee protection at all. Yes, using a client decide policy. Yes, using all practice cover. Or finally, yes, but I self-insure. What's your opinion on the self-insurers? Maybe we should let them answer the poll before we express an opinion on that.
Self-insurance. Well, let's reflect the Institute's views on self-insurance. All the recognised professional bodies take a dim view of self-insurance. Reason why? They're a members' body. Each professional association is a members' body, and they're there to protect their members. A lot of people would disagree with that. They would say that the last thing that their institute does is actually protect them, but it's part of the functionality. As far as the institute's concerned, if you self-insure and you take £100 a year off a client and put it in an account and you put it on one side and say, okay, if that's going to cover my time costs in dealing with inquiries this year, it's great, and you could probably get away with it. But if you get one particular inquiry that actually runs and runs and your time costs increase and increase, and you actually got nothing left in the kitty, and actually you're not doing the work you should be doing because you're dealing with a really large inquiry, what happens if that gets to first tier tribunal? What happens if you need counsel? And actually you've told your client you're going to cover those costs. And there has been practices in the past who've gone down self-insurance who have actually been bankrupted by exactly this, because they've had to go to counsel, had to pay for barristers, and had to go down that route, and they've been paying £100,000 plus, and it's basically bankrupted them. So it seems an attractive option. You can take the money, you can sit on it, you don't actually have to hand it over. But as with most things like this, there can be a sting in the tail. So Paul's definitely a big fan of self-insurance there.
Yeah.
I think he's very much coming down on that.
It was quite interesting, those poll results, is actually less than half of people on the call actually have fee protection scheme currently. I know when I had my practice, initially I didn't, because I didn't really understand how the scheme worked, and I kind of felt like I'm just flogging insurance to my clients here. It's not something I want to be a part of. But like Paul says, it's protecting the practice, not your clients. And I went through that kind of process. I started off with a client side policy because I felt like, okay, if I'm going to do this, I'm not going to try and enforce it on everyone. If they want it, they can have it. But actually, I then started to realise as those inquiries were coming in, and then it meant not only are my costs covered, I could actually devote much more time to doing a thorough job of responding to inquiries and not just trying to get it out quickly because I'm not going to see any return for the work. And similarly, if it was a case that was looking a bit complex, I'm not suddenly left with no assistance handling a query that is really above and beyond my expertise. I have the ability then to pull in experts like Sara to take over and handle those inquiries for me.
It's really important at the moment. We're seeing more and more what we call virgin schemes, those practices who don't have a scheme in place at the moment, coming to us, even those that traditionally have resisted it. And when you ask them why, most of the time the response is, I'm getting clients asking for it. And because they've got a mate in the pub who's just had a tax inquiry, they didn't have to pay any fees because they'd taken the insurance and were covered for it. And that's led to a conversation, oh, my accountant's not mentioned that. And they'll approach you and say, can I have this? And you'll say, well, no, I don't offer it. And there's a risk then, of course, you'll lose the client because it actually seems important that for a cost of £100, £150 a year, whatever it may be, they've just saved the potential risk of a £2,000 additional bill for an aspect inquiry, whatever. So, yeah.
So it will be interesting to, again, conscious of time because we are coming up to the 3:30 mark. There are lots of questions that we would be keen on answering. I think we're happy to go over time. If you are happy to join us, if you can't join us, I understand we did say we'd finish at 3:30. We will be getting a copy of this so you can check in after, but we're happy for you to join us and we can stay on. But one of the issues around fee protection, as I understand it, is the admin. And you were saying that a lot of people don't like to.
Yeah.
It basically give you their data so that you can send.
One of the biggest issues is that to actually promote the service to the clients, there is a piece of marketing mailing that is required to invite those clients to join the service for the year. That is one of the major stumbling blocks, especially with smaller practices who have less admin resource behind them. And that's been a hurdle or a barrier in many cases to actually taking cover or putting a scheme in place. As an industry, we offer solutions and issues around that. We can provide mailing services, we can do mail merges on behalf of the practice, but to actually get to that stage, we still need them to put together the cleansed data to send across to us to do that mailing. We do it in a GDPR compliant way, under a data protection agreement, etc. But there's still that hurdle and barrier to doing it.
Right.
So I think you might have a solution potentially.
Yeah, Dean, we do have a potential solution for tax calc customers, at least.
Yeah, we've certainly got tools that can assist with the admin side of things. So I can do a little demonstration of those for you now. And I think actually something Paul told me a long time ago that kind of changed my thinking on it a little bit. He's laughing now, worrying what I'm going to say. Yes, what I'm going to bring up. But he actually said, treat the fee protection scheme as you would a client. So look at the revenue that you're getting from it, the amount of time it takes you to administer it, and think, well, actually, am I putting the same kind of investment as I would in a client that's delivering that kind of return for my practice? And when I kind of started thinking it in that context, I was thinking, well, actually, if I had a client paying me the revenue I'm getting from this scheme, I would put so many hours into it, and that's thereabouts what I'm putting into this. So it kind of changed my thinking around the admin side of things that involved. But in terms of how TaxCalc, for the TaxCalc customers on the call, how our software solution can help you with administering the scheme. I just want to show you a couple of things within the suite that you may or may not be aware of that can assist you. And this is with Practice Manager and Communications Centre. So everything that's within Practice Manager, everybody gets. It comes with the suite. And Communications Centre is a add-on that can help you send emails out to your clients much more efficiently. So if I just go into Practice Manager and then go into a client record, we'll just see in the standard client database that you'd have in any similar product. Just records all the usual information that you'd have for a client: name, address, date of birth, that kind of thing. But within TaxCalc, we've got the ability to add custom fields, which means you can turn TaxCalc into a CRM system, because you can record information on virtually anything that you want related to your clients. So just for some examples, I've set up some custom fields here for my practice within TaxCalc. One of them is bookkeeping responsibility. Who does the bookkeeping? Is it the client? Is it us? Do they have an external bookkeeper? We can just keep a record of that, what system they're using. But for fee protection, I've also set one up to show the different levels of fee protection cover that the clients have, or whether they don't have it at all. So in my practice, I did a gold, silver, bronze, different service level for the type of cover that they wanted. So whether they wanted just VAT only, that would be the bronze, even though I had the all practice cover, so I was covered for everything. But some people only wanted to an entry level, cover them for the VAT. Silver was a great level for the income tax or corporation tax, and then I think, if I recall, for the gold, I had cover for spouses, and all the other extras that you often get from fee protection, like Paul said about the kind of legal, health and safety, HR support, that kind of thing. So we can just set what level of fee protection this particular client has, and then we'll do that for our clients. Now, the advantage of having all the information, firstly, I can run reports on it in Report Manager. So as well as setting up custom fields, you can set up custom reports. So a load of reports come with TaxCalc Suite, but you can also create your own. I've created one for fee protection status. So if I just run that report, I was going to create a new one there. Run that report. You can see I've got a list here of all my clients, what level of fee protection they've got, and who is the member of my team that's responsible for that client. So if I look through the list and think, well, actually, we've got a lot of people here that haven't got fee protection, I can just I can export this report into Excel, get a copy out to each of an individual member of my team, and they can just do some follow-up with those clients to find out why they haven't, or whether we have actually sent them the details or not. So from a reporting side, it's really useful. And if there are blanks and you think, well, I'm sure that shouldn't be a blank, then again, you can just send that out to the member of the team responsible, and they can update it, and then you've got your data all up to date. But I think from a primary advantage, certainly from a communications point of view, is that we can use TaxCalc to send all the information out, all the relevant information out to your clients in a personalised way, so that they get the information that's specific to them, and that will help you administer the scheme. So like you can do bespoke custom fields and bespoke reports, you can also set up bespoke email templates. Again, some of these we ship with the product, but I've set up these myself. So I've got fee protection new, so that's people that are either new to my practice or haven't had fee protection before. So we'll send out information that gives them a good overview about what fee protection is and the different levels. And I've got one called upgrade. So for people that have perhaps taken out bronze or silver cover, I haven't forgotten about those. We'll just remind them of all the benefits that from a higher level of cover, and whether that's something they want to pursue. In terms of sending messages out, it can be done very quickly. You can just go to send message. I'm going to say it's come from me. I'm not going to individually type in all my clients' email addresses here, so I can just go to choose mailing list, and I've got a mailing list set up here, one called fee protection upgrade, one fee protection new or none, and that is pulling out that information that we created custom fields for in the database. So if we've recorded all my clients that are currently on bronze or silver package, I can use the upgrade option, and that gives me that list of clients there. And we're going to choose to send them the update email, which I've done on here, fee protection, upgrade, and then this just from the template creates the email with all the information they need to go out to those specific clients. All the personal client level information will be inserted. I can preview the message if I just select one of those clients. So we can say here, this client David, his name's inserted, he's got the bronze level cover, so that's inserted automatically, you don't have to think about it. My details are inserted at the bottom, and then for all those clients, we can either click send now, if I'm happy for that just to go out to all those clients selected, or I can click send later, and then all those emails will just sit there waiting in my outbooks when I'm happy for those to go out to the clients. That's a very quick overview of what we've got in the product. If you are interested in a bit of a deeper dive and learning more about Practice Manager and Communications Centre, and it could help you administer that, then I'm going to put up our final poll of the day, which is just simply asking if you are interested in learning more about Tax Account Communications Centre. If you tick that with a yes, then we'll be in touch with some more details.
Fantastic, thank you, Dean. So it isn't necessarily as arduous as you might have thought. Okay, so we have gone over time, but I do want to get to some of these questions, if I may. A couple of questions. Tony, I think, Paul, sorry, I think these are mainly for you. So we've got Tony asking, there's a lot about what's going into Connect.
Okay.
So I'll conflate a couple of the questions here. Is it bringing in a level of money coming in, resulting in VAT threshold, basically what is going in? And does it also bring in ONS survey data as well? Do you know?
I don't know if it actually brings in the ONS data, because I think there might again be some bit of data protection issue going around around some of that. The problem you have is that most information that you give to the government or the government department is a legal requirement. The ONS being in one of them, obviously. So they can use that information in any way which they use. Is it going into Connect? I honestly don't know is the answer. If you wanted me to make an educated guess, I would say yes, it probably was. All the relevant bits have probably been pulled out of that and have gone into the system on that. It's just used for everything. I know it sounds daft, but it's used for everything. If you apply for a passport today, Connect will be told about it. Yeah, simple as that. If you apply for a new driving licence, Connect will know about it. If you've applied for an HGV licence, Connect will know about it. If you're not driving as an HGV driver, why have you applied for a licence?
Right.
Simple, easy things to do. And all that information is coming through. So if you've just bought a property, you've not shown it on your tax return as your principal private residence, you haven't told the revenue you're living there, what are you doing with the property? Have you disclosed rental income? Oh, no. Very simple, easy routes to follow coming through. Company's House now is linking in more and more with revenue. So whose directors, again, it's all sitting in Connect now. They have that information readily available, who's a director of which company. Where before that information wouldn't have been clear and obvious to them without asking questions and digging to get it. So it's this, brave new world we're living in. In terms of VAT, anything on a quarterly VAT return is automatically in Connect, because that's the basis of Connect. It started with the revenue. So anything the revenue already hold or continues to receive, it will be there. And this will feed into the MTD returns as well on self-assessment as we go through and things now, and those checks will be made. If you give me a second, if you think where do you think this is going to? I think in 5-10 years' time, we'll get to a point where anybody who sets up in business, who has a cash register or a card reading machine, the business UTR will have to go into that machine. And every time a transaction is processed through to it, the revenue will know immediately of that transaction happening, because it will be linked to the UTR. Somebody said to me, don't be stupid, that's not realistic. My answer to that was, when was the last time you bought a coffee in Costa Coffee, and how did you pay for it? A couple of days ago with my card. If you'd have walked out of Costa Coffee and gone on your banking app, that transaction would already have been there. Technology for it already exists, the revenue just aren't using it yet, and they will get there.
We've had a good question here, I think, perhaps for Sarah, about whether it's permitted for you to be coaching your clients in terms of giving answers. I guess you mentioned pre-meetings before. I guess is that part of the pre-meeting process, and then during the meeting with HMRC itself, how much can you intervene with what they're answering?
I suppose in having a pre-meeting with the client, it allows you to the softer side of how to handle the pressure of the meeting with HMRC, As Paul has suggested, you'd always ask for an agenda in advance. So if you, in some cases, you'd have questions in advance. If you didn't, you'd have agenda points and you'd know where the discussions were headed. So I would treat it as though I was sitting in the shoes of HMRC and asking the client how they intended to respond to the discussion points. So it certainly wouldn't be, I think you should say this. You tell me the response, the factual response to the points that you're going to have to discuss. And I don't think it would be a case of saying, oh, I don't think we need to tell them about that, but it might be that, you know, they go off message a bit and it's not actually relevant. So you don't want your client to be with HMRC any longer than they need to be. And then, of course, the third part of the prep is making sure that the client fully understands the inquiry or investigation as best as they're able to. It's always hard with any inquiry or investigation because there are time lapses between each step. You issue a letter, you wait for the response, by then you have to revisit your first letter, remind yourself what the issues were. So having one meeting where you discuss the chronology of what's happened so far in an hour or an hour and a half just brings everything back to the front of the client's mind. That's the sort of prep I would do, which is perfectly acceptable because I think it's fair to say HMRC are very understanding of the stress that an inquiry or investigation causes, and that we're best supporting the taxpayers to ultimately bring it to conclusion as best we can.
I think there's a bit that says that, you know, as professionals, you know, there's not a question of trying to train, you know, teach or coax your client to be dishonest in any way, shape or form. It is always, you know, your client, we will always encourage and make sure the client is answering questions honestly. But there is a point actually where that's enough information. You don't need to give any more. You've answered the question. That's you don't need to go any further. Stop. And that's your job in those meetings. If your client's going to go wittering on and giving a whole wider picture, actually you don't need to. You've answered the question. Stop.
Sure.
And that's the role, really, I think, in that situation.
And on that note, I think we are unfortunately going to have to stop. We have gone some time over, and thank you very much for staying with us. I hope you found this useful. But we've hopefully covered as many questions as we possibly could, and we will attempt. There were some requests in the questions there for us to send some links out when we send the copy of this. You will get an automatic copy of this exact what you've just seen. We will follow that up with another email with those additional links to the nudge letters as well. So I would like to thank once again Sara Scala, Paul Rigney and Dean Shepherd for sharing your time. It's been hugely interesting and valuable, I think. The next edition of Tax Calc TV will be on the 19th of April, and we are going to be looking at the subject of outsourcing. Obviously, a lot of firms, and pretty much everyone I've spoken to in the last 6 months or so has been either looking for staff or struggling to recruit staff. And a number of people are turning to outsourcing overseas. We're going to be looking at how that can work and how that can potentially go wrong as well. So if you are looking at that in your firm, make sure you join us, because we're going to got some very, very useful insight on that as well. So until then, I wish you a very lovely rest of budget day. Hope it's good for you, and we'll see you next time. Thank you.
You have been listening to the Tax Calc podcast of the Tax Calc webinar, HMRC Investigations Investigated. The presenters were Andy North and Dean Shepherd, with special guests Sara Scala and Paul Rigney. The producers were John Davis and Tom Holmes. The original webinar was broadcast on the 15th of March 2023 and can be viewed at www.taxcalc.com/events. Please be aware that deadlines, rates and other technical details referenced may have changed since this date.